why should you invest in alternative investments, right? Why should you be there? And then how do they really work? What are those options? And what are the best options that could be for you? Stay tuned in this video because that's what we're going to cover today. All right, so you may or may not have heard of alternative investments, but you're probably wondering, why would I be in alternative investments? What are they? How do they really work? I'll tell you, in my life and in many of our clients' lives, we've made millions more dollars doing that than going the traditional route your financial advisor recommends. And just so you know, alternative does not mean high risk necessarily, and it does not even mean something that's just out there in the fringes. This could be something that's actually been done for centuries, and you can take advantage of it too. So here's how you can do it. So you've probably sat down with a financial advisor, or at least heard a financial person on TV talk about, or if you haven't met with any of those people, you've probably heard some brother-in-law or some friend talk about you can invest. And every time they say invest, it usually means stock market, doesn't it? Always stocks, bonds, or some kind of mutual fund. You save your money into a 401k. And the truth is, people are not really investors, they're just really good savers. They know how to save and set it and forget it, put their money away with their fund managers, like their financial advisors. They might put it into their 401ks and lock it up for sometimes decades before they can even do anything with it. And they just hope that it makes money. And the problem with this is that, unfortunately, financial advisors are not incentivized to teach you about any other options. The truth is, if you're in stocks and bonds, even though they say you can diversify among them and diversify among stocks, you're really not diversified. You're in the same asset class of paper assets. That's it. You're not in business, you're not in real estate, you're not in commodities, although they might have businesses that might tie to those somehow. You're really not diversified. You're in one little spot, one little niche of the market. And the reason you've been taught that forever is the same reason I was taught that, which is financial advisors only make money when you put money in those kind of vehicles, when you put them in those IRAs and 401ks and Roth IRAs and mutual funds, things like that, annuities, whatever it might be, insurances. They only make money there. If you were to go buy that real estate property next door, guess how much money your financial advisor makes? Goose egg, fat big zero, isn't it? They make no money. So where's the incentive for a financial advisor to want to give you that advice? They don't. And that's why we have this alternative investment category, because Wall Street is not like Main Street investing. Main Street investing or alternative investments are anything outside of Wall Street, anything outside of the stock market, the bond markets, the traditional things you hear about, even the banks that offer you CDs and money markets and loans and things like that. That's all Wall Street based stuff. It's all the stuff that a financial advisor is paid to sell you. And that's what I realized too. When I was a financial advisor, I'll tell you, for 4 years, I taught people that is the place to invest. If someone asked me about, hey, what about investing in this real estate? I said, oh, you can do that, but that's risky. And if you put money in real estate, it doesn't grow very much. Look, I have the chart to prove it. Real estate grows by this, but the stock market grows like this. You can do that. Real estate, bad. Stock's good. That's how financial advisors teach. We talk like cavemen, obviously, right? So we were showing people this, no, this is the place to invest your money. That's it, because you barely even keep up with inflation doing real estate. However, after 4 years of being in that space, I remember I sat down in a real estate meeting. Somebody told me, hey, go check this out. It's in Salt Lake City. So I sat down, and this guy was like a former laundromat owner. So he had already been a business owner, but then he got into the real estate game and started to love it. And I remember he taught a concept that my little financial advisor brain didn't want to learn, because he would teach a concept. He'd say, well, guys, here's the thing. You put your money in the stock market, whatever you make, you make. He's like, however, if I buy a $100,000 real estate property with a $10,000 down payment, he's like, if that property appreciates by 10%, I don't make 10%. He says, I make more. Why? Because if I put a $10,000 down payment and then it grows by another 10% or $10,000, my $10,000 just made $10,000. That's a 100% rate of return on my money. Like if that property appreciates 20%, I make 200% rate of return on that same money. That doesn't even include making rent off that property or anything else. And I remember thinking, because remember, to a hammer, everything looks like a nail. My financial advisor brain said, hold on, does not compute, do not register. No, that's gotta be bad. No, you just gotta know what you're doing, and nobody knows what they're doing. By the way, as a financial advisor, I was taught to tell you, you lack the 3 T's, the time, the training, or the temperament to do your own investing. How lame is that, right? Like, how stupid is that to say, you know what, you don't have that, you can't handle it, you're not smart enough, you don't have enough time, and your emotions, you can't control your emotions, so just let me do it for you. Even though I don't know what I'm doing either, and I'm just throwing in this thing, and I just hope it works out. That's what I would teach people, right? Again, I didn't use common sense because my career was on the line. My pocketbook was on the line with that. But the truth is, guys, that you could do your own investing, and it doesn't have to be on Wall Street. It can be in alternative investments, which is anything outside of that. That includes real estate. That includes even crypto. Yes, crypto is even alternative investment. That includes things like in business. You can invest in business. Really anything outside what a financial advisor offers you, which, by the way, is the stuff that we've been doing for hundreds of years. People have been investing in businesses and in real estate for literally millennia, right? Like for multiple thousands of years, they've been doing this stuff. The Wall Street, that's been recent history. But that's what everybody's been telling you to believe. So remember, it's not just Wall Street. You do have alternative investments you can invest in. Now, here's the reason why I love investing in alternative investments. One, I can make much higher returns in the stock market. I realized after being in the stock market for so much time, and eventually I quit being a financial advisor when I realized I was just a salesman in a suit. I left to go do something else to find real answers, something that actually worked in real life. Because I noticed my clients were retiring financially free. And by the way, neither were the advisors. Once the advisors stopped their profession, when they stopped making their commission from sales, they weren't making a lot of money on their investments either. So if the clients aren't making money and the advisors aren't making much money in those investments, why would I do it? Why would I trust it? Why would I want to recommend it to anyone? So I started looking for those alternative investments, those other alternatives. And that's what got me into like real estate investing and whatnot. The thing I realized, there was higher potential returns. Just like I mentioned about that example with that real estate investor, that $10,000 down payment could create multiple tens, hundreds % return, even if just the property appreciates. That doesn't even include the fact that we can make income off of it or anything else, right? Not to mention, there's tax advantages. I get to pay less in taxes on that money I earn, or if I put my money in a 401k or an IRA, I pay the full brunt of the US tax system. I pay ordinary income tax, which is the highest tax rate you could possibly pay, which is ordinary income, which is where you save your money when you put it in the stock market. Even if those that are investing in the stock market have realized that unless they put it into a Roth, they're going to have to pay the highest tax bracket possible. The problem is if you try to put your money in a Roth IRA, they'll only let you put in $6,000 or $7,000 a year. So you're really drastically limited to how much you can actually contribute unless you do some other creative strategies. And so for the average American, they're just not making it. But with alternative investments, and I realized this with my dad when I sat down with him and he said, "Chris, I've got money. I've been saving my whole life. I'm debt free. What do I do?" And I said, "Well, you better die soon because you're going to run out of money in these mutual funds. It won't last you long enough. Even though you did everything right, it's just not enough." But as we start to look at the other things, like, well, what if he could lend his money to somebody else, right? What if he could lend your money, like $100,000, to get paid 1% a month? And the great thing is that if you can even get your name tied to that property. Now, I don't mean like your name for the liability purposes, but say, for example, if that investor that you're investing with, it's a real estate investor doing their own stuff, but then they're borrowing the money from you at 1% a month or 12% a year. Now, if they don't pay you, you get that property. The property is yours. Just like the bank gets your house if you don't pay your mortgage payment, or they get your car if you don't make your car payment, you can do the same thing by being the bank, investing your money, loaning your money to investors, and get paid a contractual interest rate, a contractual return. Understand that in the stock market, you're lucky to get like a 8% or so type of interest rate. 8 or 9% is about the most you could probably really count on, maybe long term. 10, 12% is all lies. You really don't get that kind of return in the stock market. So I'm hoping to take these high risks to get mediocre returns where I could take lower risk, doesn't mean it's risk-free, but lower risk by investing in real estate, something that has real backing to it, a real asset backing it up, and then I get paid on that money too. Then I get paid even like 10%, 12% a year consistently. It's much better. I remember telling my dad, it's like, "Dad, you can only pull out maybe 3, maybe 4% a year on your money." Well, when he had $300,000 saved up at that point in his 60s, I said, well, that means you can pull off between a whopping $9,000 to $12,000 a year. $750 to $1,000 a month, and then you pay taxes on it is not going to cut it, will it? But I said, well, Dad, if you had $300,000, you get paid 1% a month. Now you're getting paid $3,000 a month. Now you combine that with Social Security and everything else. Now you have a much different lifestyle. And that's the thing I see over and over again is that we have clients coming to us that say, "I'm looking for something else. What else can I be doing? Can I actually put money in something that's backed by real assets like real estate? Can I put my money in oil and gas? Can I get paid off royalties of that oil and gas that's being drilled, that's coming out of the ground? I get paid profits off of that. I can get paid profits on a business. I can get paid profits on this." When I realized when I left the financial advising world, this whole new world opened up. I'm not going to sing Aladdin for you, right? But this whole new world opens up for you that you can see that there's all these alternatives that are out there. You realize you actually have more options, more choices, more diversification than you'll ever have with your financial advisor. And that's why there are sometimes, on a rare occasion, you'll see a financial advisor might be a fee-based advisor, will charge you fees. They'll say, yes, you can then do this. This is why when we have clients, we don't try to make commissions and stuff like that. The clients pay us, we work for them, and we try to help them strategize and then connect them with deals that could be useful for them, the deals that could actually help them get to their financial goals faster. The thing I also love too is that everybody worries about inflation. We don't, because inflation's worse when you try to save long term. If you're trying to save for 30, 40 years, compound that money and then live off of it, well, in 30, 40 years, what's that money really going to be worth? If you're trying to save up for that $1 million goal, but in 30, 40 years, that $1 million is really worth like $100,000, you're not going to be living pretty happy and free, are you? But if you can get people to retire faster, that's different, right? I'll give you an example. I had one client, he was an attorney. He was meeting with a financial advisor. The financial advisor says, hey, if you keep taking your $1.8 million, keep reinvesting and everything else, you'll probably be able to live on $60,000 a year in about 12 years. And I said, well, that's nice, but you got $1.8 million. What if you made just 10% on that money? This year, you can make $180,000. That's $15,000 a month, $180,000 a year, not $60,000 or $100,000 you're hoping to make in maybe 12 years. You could do it in the next year. Or if you wanted to bump it up to $200,000 a year or so, great. Take another year or two longer and you could get there faster. Because it's not about how much you save, it's about how much you can get that money to pay you. That income is the real thing. Cash flow is what creates freedom. Passive income is what creates freedom without you having to touch your own money. So it's about how hard can you get your money to work so you don't have to keep working so hard for that money. All right, you want to dive deeper and figure out what's in this whole new world of alternative investments? Go to moneyripples.com, subscribe to our email newsletter so you can stay in the loop and find out what are these strategies and how can you make it work for you right now.